Bismillah ar-Rahman ar-Rahim. This side the Allah Haidari. In this video, we are going to discuss about the straight line method of depreciation. Before going to discuss about the straight line method, so let's understand the concept of depreciation, that what depreciation is. In the simple words, depreciation means decrease in the value of tangible assets. When we purchase an asset, especially when the asset is in the form of the fixed asset or asset is in the form of the planned assets, those assets which are used in the business for more than one accounting period or more than one financial year, so obviously the value of those assets annually will decrease. Suppose we have purchased an equipment for the asset with the cost of 5 lakh Afghanis. So after 1 year, the value of the asset will not remain as 5 lakh Afghanis. If we have purchased a machinery for the business operation with the cost of 1 lakh Afghanis, after 1 year, the value of that machinery will not remain as 1 lakh. So the value of that machinery will decrease. So that is called as depreciation. The decrease in the value of the plant assets, decrease in the value of the tangible assets are called depreciation. For the depreciation, there are different methods of calculation, which the first method of calculation of depreciation is a straight line method. The second method is units of production method, and the last one is double declining balance or double declining method. So in this video, our main focus is about the straight line method. So in this video, we are going to discuss that what a straight line method is, how we are going to calculate the straight line method of depreciation. For calculation of a straight line method of depreciation, we must know these three components or these three elements. We have to know it while calculating of the straight line method of depreciation. The first one is cost. Cost is the total amount of money which is paid for acquiring of an asset. It means that is the asset price plus any other reasonable and necessary expenses. Suppose if you have purchased a machine from China with the price of 5 lakh Afghanis, after that you have paid the expenses for the transportation, you have paid the expenses for the taxes, you have paid the expenses for the installation, you have paid the expenses for the testing purposes. All of them would be added, and after that you will get the cost. So this cost, we can write it as acquisition cost as well, or this is called the total cost as well. The total amount of money which is paid for acquiring of an asset, that is called as the cost of it. This is the first thing that you have to know it, and we have to know it while calculating of the depreciation with the straight line method. The second thing is estimated useful life. Basically, estimated useful life means the length of services expected from using of the asset. It means that for how long the asset can be used. When we are purchasing an equipment, so we have some estimation, we have some expectation that asset will be used in the business for 5 years. Assets will be used in the business for 2 years. Assets will be used in the business for 20 years. It depends on the length of the services which the asset can provide. And basically, the useful life is based on the estimation. Why this is based on the estimation? Because exactly we don't know that if we have purchased an equipment and we are expecting that we will use that equipment for 5 years, exactly that will be used for 5 years. There is possibility that maybe that machine or that equipment will stop working before 5 years, or even there is possibility that machine or equipment will work after 5 years as well. So this is based on the estimation. This is based on the possibilities, or this is just based on the expectation. Our expectation is that this asset will be used in the business for 5 years. Our expectation is this machinery will be used in the business for 10 years. Our expectation is this building will be used in the business for 30 years. But nobody knows because future is uncertain. Maybe there is a possibility that asset will be used for more than that period, or maybe the asset will be used for less than that period as well. The third thing that we have to know while calculating of depreciation with the straight line method is estimated residual value. Students, residual value or salvage value or scrap value, all of them, these are same. A scrap value residual value, and salvage value. All of them, these are same, and there is not any differences. Same of them, all of them, they have the same concept. In the simple words, how much the value of the asset will be after the estimated useful life of it. What does it mean? Suppose you have purchased a truck for the business operation. You have purchased the truck with the cost of 5 lakh Afghanis, and you are expecting that you will use that truck for 5 years. After 5 years, how much you can sell that truck, that is called as the estimated residual value, or that is called the estimated salvage value. So students, in case of the estimated salvage value, this is also based on the estimation, and this is also based on the expectation, because exactly nobody knows that the value of this machine, the value of this truck, the value of this equipment after the estimated useful life of it will be the same. Maybe like there is possibility the value of it will be more than what we are expecting, or the value of it would be less than what we are expecting. So this is based on the estimation. This is based on the estimation. So students, these three components, we have to understand it while we are going to calculate the depreciation expenses. The first thing, cost, the total amount of money which is paid for acquiring of the asset. Second one, estimated useful life, that for how long the asset can be used in the business. And students, for the estimated useful life, one more thing, keep it in your mind, that it's not necessary that always the value of the asset will be calculated on the basis of the years. Even it can be on the basis of the units of output, it can be on the basis of the miles, or it can be on the basis of any other measures as well. Suppose if you have purchased a machinery, that machinery has the capacity to produce 1 million product. Now this 1 million, it doesn't matter, that's going to produce within 1 year, within 2 years, within 3 years. It is based on the units of output, which later on in the different methods of depreciation in the units of production, we will have discussion about it. And residual value, that is called the scrap value, or that is called as the salvage value, that how much the value of the asset will be after the expected time period, or after the estimated useful life of it. These are the three things. Please try to understand it, and on the basis of it we can calculate the depreciation expenses. So now let's specifically discuss that what is the straight line method of depreciation. Basically, in the straight line method of depreciation, we are going to assign equal amount of depreciation expenses for every year. It means when we are calculating the depreciation expenses, the depreciation expenses would be equal for every period of time. Suppose if there are 10 years, and depreciation expenses that we have calculated, that is 1000, so that 1000 would be assigned for every year. It means from the first year till last year, it would be assigned. And students, the good thing about the depreciation expense calculation of depreciation with the straight line method is that this is a very easy calculation, and we have a very easy formula for calculation of the depreciation expenses. At the same time, this is the most common method of depreciation. It means majority of the companies, majority of the businesses are going for the straight line method of depreciation. On the basis of the different statistics, about 88% of the businesses, 88% of the organizations are using the straight line method. It means this is the most common type of it, while the accelerated is 7% and units of production is 4%, and 1% is using other methods of depreciation. It means this is the most common and the most used method for calculation of depreciation expenses. So I hope the concept for the depreciation expenses, I hope the concept of a straight line method is clear to all of you. Now we are going to focus on the formula which we have for calculation of the depreciation expenses with the straight line method. The formula, as I told you before, there is a very easy formula which we have for calculation of the straight line method of depreciation. So the formula which we have, directly we are going to calculate the depreciation expenses, which depreciation expenses is equal to asset cost minus estimated salvage value divided by estimated useful life. All of these three components in the previous slides we have discussed about it. Now, students, depreciation expenses, that later on we will discuss about it, that what it is. It means how much annually the value of the asset will decrease. That is called depreciation expenses. What is asset cost? Asset cost is called the acquisition cost, or this is called the total amount of money which is paid for acquiring of the asset. Already we had discussion about it. Minus estimated salvage value. Students, with the red color, you can see that this is based on the estimation. This is based on the estimation. It means salvage value, nobody knows about it, that the value of the asset after estimated useful life will be 5,000, will be 10,000, will be 20,000. Suppose if our estimation is that much, there is possibility that the salvage value could be more than our expectation, or it could be less than our expectation. That's why it is based on the estimation. What is salvage value? Salvage value is called scrap value, or salvage value is called residual value as well. Residual value, scrap value, and salvage value, three of them, they have the same concept, they have the same meaning. And students, in the denominator, we have, like after this, asset cost minus estimated salvage value divided by estimated useful life. Estimated useful life, the useful life of the asset is also based on the estimation, or that is based on the expectation. There is possibility that the value of the asset, there is possibility the asset will be used for 5 years, the asset will be used for 10 years, the asset will be used for 1 year. It means whatever our expectation is, maybe that will be like we will reach to that, or whatever our expectation is, maybe like we will not achieve whatever we are expecting, or whatever our expectation is. So students, estimated useful life in the straight line method of depreciation, it will be based on the years. It will be based on the years: 1 year, 2 year, 3 years, 5 years, 10 years, 20 years, as much as it is. But it can be in the form of the output, units of production. It can be in the form of the miles, or any other methods, any other measures. It can be that, inshallah, in the next methods of depreciation we will have discussion about it. So students, that's all about the concept of depreciation with the straight line method. I hope the concept of a straight line method is clear to all of you. I hope you understood that what is a straight line method, and I hope you have understood the formula for calculation of the straight line method. So next we are going to explain the straight line method of depreciation with the help of a numerical example. Students, in this example that we are going to elaborate, we are going to discuss about the straight line method of depreciation with the help of a numerical example. The example is that on 1st January, ASIN Corporation purchased equipment for 27,500. Students, I'm requesting you that please you should have a piece of paper and pen with yourself while I'm explaining, so you have to write it down as well. You can note it with yourself. You can calculate it. So students, on January 1st, ASIN Corporation purchased equipment for 27,500 cash. What is 27,500 cash? This is the asset cost. This is the asset cost, the total amount of money which is paid for acquiring of the equipment. The equipment has an estimated useful life of 5 years. Equipment is the expectation of the ASIN Corporation is that the equipment will be used in the business for 5 years. Now this is based on the estimation. Maybe that equipment could be used for more than 5 years, it can be for less than 5 years, but in the straight line method we are calculating it on the basis of the 5 years, which that is the estimated useful life of the equipment or the asset. And estimated salvage value of 2,500. The total salvage value or scrap value, which that's also based on the estimation, we are expecting that after 5 years the value of the asset will be 2,500. The disposal will have the value of 2,500 USD, but now that is based on the expectation. Maybe the value of it will be more than 2,500, it can be less than 2,500, because that's also based on the estimation, or that is based on the expectation. And now the question is that what is the annual straight line depreciation expenses? This is the question. We have to calculate the annual depreciation expenses. It means how much the value of the asset annually will decrease. So let's calculate the depreciation expenses. Students, as it's mentioned in the question, that the asset cost is to 27,500. Estimated useful life of the asset is equal to 5 years. The estimated salvage value of the asset is equal to 2,500. Now we are going to solve the depreciation expenses. First of all, let's write the formula for calculation of depreciation expenses. All of you know that depreciation expenses formula which we have, that's equal to asset cost minus estimated salvage value divided by estimated useful life. This is the formula which we have for calculation of depreciation expenses. Depreciation expenses equal to asset cost minus estimated salvage value divided by estimated useful life of the asset. Now let's calculate that how much is depreciation expenses. So I'm going to put the numbers in the formula. Depreciation expenses is equal to, that's equal to asset cost. How much is the asset cost? Asset cost is given in the question that we have it. That's equal to 27,500. So I will write it as 27,500 USD, which this is the cost of the asset. This is the cost of the asset. It means the total amount of money which is paid for acquiring of the asset, that is equal to 27,500 minus estimated salvage value. The estimated salvage value is also given in the question that already we have it. Estimated salvage value is equal to 2,500 USD. That's equal to 2,500 USD. 2,500 USD, that is the estimated salvage value of the asset divided by. So estimated useful life of the asset. Estimated useful life of the asset is how much? Estimated useful life of the asset is equal to 5 years. It means it's expected that the asset will be used for 5 years. Expected the asset will be used for 5 years. Now students, let's continue with it, that this is equal to depreciation expenses is equal to depreciation expenses equal to 27,500 minus 2,500. Students, I'm expecting that every one of you should have your calculator with yourself, because while we are going to solve it, it would be easier and less time consuming. 27,500 minus 2,500, which that's equal to 25,000. That's equal to 25,000. Students, this 25,000, one thing to keep it in your mind, and let's have discussion here. This 25,000 is called depreciable base. This is called depreciable base, or this is called depreciable cost as well. It means that depreciation will be calculated on the basis of this 25,000. Now we students are asking the question that depreciation is why not counted on the basis of this 27,500? Because in this 27,500, 2,500 is fixed. This will be the value of the asset after 1 year, after 2 years, after 5 years. But now this 25,000 is going to be depreciated, which this is called depreciable base as well. If someone asks you that what is depreciable base, you should say that asset cost minus estimated useful life, that is asset cost minus estimated salvage value, that is we will get the depreciable base or depreciable cost. 25,000 divided by 5, that's equal to, so how much that's equal to? So let's write it as here. That's equal to 25,000 divided by 5. That's equal, every one of you know it. That's equal to 5,000. If we divide 25,000 by 5, so you will get the 5,000. Now students, it means that annually the value of the asset will decrease by 5,000 USD. Annually, the value of the asset will decrease by 5,000 USD. It means after every year, the value of the equipment which we have purchased for 27,500 will decrease for 5,000 USD. So student, this is called the depreciation expenses, and this is how we prepare the This is how we calculate the depreciation expenses of the planned assets or of the long-term assets. I hope the concept is clear to all of you. So students, the 5,000 is depreciation expenses. It means the value of the asset annually will decrease by 5,000 USD. Now the question is that if you want to know that how much the value of the asset will be after 3 years, if you want to know that how much the value of the asset will be after 4 years, if you want to know that how much is the total depreciation expenses after 3 years, if you want to know that how much the total depreciation expenses is after 3 years, so how we will know it? For that, the businesses, they are going to prepare the depreciation schedule or depreciation chart. They prepare the depreciation schedule or depreciation chart. Students, depreciation schedule is called depreciation chart, and this is called the depreciation table as well. So on top of it, students, you have to write it as that this is depreciation schedule. And after that, in the depreciation schedule, there are 4 columns: column 1, column 2, column 3, and column 4 for the straight line method of depreciation. And the first column, which that is the column for the period, it means how many periods we have. In the first column, we write this. And the second column, we have column for depreciation expenses. The next column is the column for accumulated depreciation. And the last column is the column for book value. Now students, what is a period? Period is the different years: year 1, year 2, year 3, year 4, year 5, whatever it is. So that is called the period. Depreciation expenses, that's already we have calculated how much the value of depreciation, how much the value of the asset annually will decrease. That is called depreciation expenses. Next one is accumulated depreciation. Accumulated depreciation means summation of depreciation or the total depreciation, or how much the value of the asset has decreased, the summation of it, that's called as accumulated depreciation. Book value. Book value means that how much is the value of the asset. How much is the value of the asset? It means when we deduct from the asset cost, the depreciation expenses, will get the book value. It means after 1 year, the asset which we have purchased, suppose with the cost of 27,500. After 1 year, how much the value of it remain? That is book value. After 2 years, how much remain? That is book value. After 3rd year and after 4th years. So now students, in this formula, in this chart, let's put them whatever we have, and if we don't have, so we have to calculate it. The first one is period. The period is based on the different periods which we have. So that is on the 5 years. It is given in the question. You just look at the students. In the question, it's given that the estimated useful life of the asset is 5 years. So period is for 5 years. Year 1, year 2, the 3rd year, the 4th year, and the last one is the 5th year. So these are the different periods which we have it. Coming to the depreciation expenses. Students, depreciation expenses already we have calculated. From where we have calculated? Asset cost minus estimated salvage value divided by estimated useful life of the asset. So that's equal to 5,000. That's equal to 5,000 that already we have calculated. Students, that 5,000 is equal for every years. This is what a straight line method means. In the method of a straight line, we said that depreciation expenses would be equal for every year. In the first year, that's 5,000. In the second year, that's 5,000. In the 3rd year, that's 5,000. In the 4th year, that's 5,000. And in the 5th year, that is 5,000 USD. So students, this is the chart which we have it, that the period is 5 years, and depreciation expenses, that is equal for every year, since this is the straight line method, and we have calculated from the formula asset cost minus estimated salvage value divided by estimated useful life of the asset. So we have the periods, that is 5 years, and we have the depreciation expenses. So now let's discuss about the accumulated depreciation. As I told you before, accumulated depreciation means the summation of depreciation, or how much is the total value of the asset which has decreased. That's called accumulated depreciation. Since we are in the first year, in the beginning, so the accumulated depreciation is equal to 5,000. So I will write it as 5,000. 5,000 is the total accumulated depreciation for the first year. Now coming to the book value. The formula which we have for the calculation of the book value is that asset cost minus depreciation expenses. Asset cost minus depreciation expenses. Now students, let's look at how much is the asset cost. Asset cost is given in the question. That's equal to 27,500. Asset cost is equal to 27,500. So I will write it as here 27,500. 27,500, that is the asset cost minus depreciation expenses. How much is depreciation expenses? That is 5,000. Depreciation expenses is equal to 5,000. So students, 27,500 minus 5,000. 27,500 minus 5,000, that's equal to how much? I'm sure that you have your calculator with yourself. So that's equal to 22,000. That's equal to 22,500 USD. 27,500 minus 5,000, that's equal to 22,500. So students, 22,500, this is the book value. It means the value of the asset after 1 year is equal to 22,500. Coming to the second year. In the second year, again, depreciation expenses is equal to 5,000. This is what we have calculated before. Accumulated depreciation, as we said, that is the summation of depreciation. So summation of depreciation, I will write it as that 5,000 USD plus 5,000 in the current year. 5,000 before the depreciation expenses was, and 5 year is in this year. Accumulated depreciation is summation of depreciation. So 5,000 plus 5,000, that's equal to how much? That's equal to 10,000. It means 10,000 is the total accumulated depreciation. It means the value of the asset of the second year has decreased by 10,000 USD. Coming to the book value again 22,500, which this is the book value of the previous year, minus depreciation expenses, which depreciation expenses equal to 5,000. So I write it as minus 5,000. 22,500 minus 5,000, which that's equal to how much? Please have your calculator. 22,500 minus 5,000, that's equal to 17,500. That's equal to 17,500. So I will write it as here 17,500. It means 17,500. This is the value of the asset after 2 years. After 2 years, the value of the asset is equal to 17,500. So let's move to the next year, to the third year. The third year, again, we have depreciation expenses, which that is same as 5,000. So let's calculate the accumulated depreciation. We say the accumulated depreciation is the summation of depreciation, which previously the depreciation expenses was 10,000. So I will write it as 10,000 plus 10,000 plus, and the current year depreciation expenses is equal to 5,000. 10,000 plus 5,000. 10,000 plus 5,000. That's equal to 15,000. So I will write it as 15,000. It means 10,000 plus 5,000, that's 15,000. The total value of the asset which has decreased, that's equal to 15,000. Now coming to the accumulated depreciation. Accumulated depreciation, before in the previous year, the value of the asset was 17,500. It was 17,500 minus the current year depreciation expenses is equal to 5,000. So 17,500 minus 5,000, that is equal to how much? 17,500 minus 5,000, which that's the current depreciation expenses, that's equal to 12,500. So let me write it as 12,500. That's equal to 12,500. It means the total value or the book value of the asset is equal to 12,500. Students, the easiest way for preparation of the depreciation chart or depreciation schedule is that accumulated depreciation is going to be added. The depreciation expenses is going to be added with the accumulated depreciation. And in the book value, depreciation expenses is going to be deducted. Depreciation expenses annually will be deducted from the asset cost, and in the accumulated depreciation it would be added. So coming to the next year, to the fourth year, in the fourth year again we have 5,000 depreciation expenses. And how much depreciation expenses before we had? That was 15,000. So I will write it as 15,000 plus 5,000, 15,000 plus 5,000, which this is the total depreciation expenses or accumulated depreciation. 15,000 plus 5,000, that's equal to 20,000. That's equal to 20,000, right? 15,000 plus 5,000, that's equal to 20,000. It means the total value of the asset which has decreased has depreciated by 20,000. Now coming to the book value. In the book value, we are going to deduct it. Deduct what? 5,000 from 12,500, because the book value is 12,500 minus depreciation expenses for the current year, that is 5,000. So 12,500 minus 5,000, that's equal to 12,500 minus 5,000, that's equal to 7,500. That's equal to 7,500. 7,500. So students, it means the value of the asset after fourth year will be for 7,500. Now coming to the last year. In the last year, fifth year, again we have 5,000 depreciation expenses. Depreciation expenses is same from the first year till end of the years. Accumulated depreciation, we are going to add it. Going to add the accumulated depreciation before was 20,000. So we have to add it with the 5,000. We have to add it with the 5,000, 20,000 plus 5,000, which that's equal to 25,000. That's equal to 25,000. And how much is the book value? The book value before it was 7,500, was 7,500 minus depreciation expenses. The depreciation expenses in the current year is 5,000 minus 5,000. So 7,500 USD minus 5,000 USD, that's equal to how much? The residual, that's equal to how much? That's equal to 2,500. That's equal to 2,500. So students, 2,500, this is the total, this is the book value, or this is the residual value. Now, how to know that either the chart that we have prepared, either it is correct or our chart is not correct? So for that, students, we can go for the different methods of assessment. The first method, when you add all the depreciation expenses, it should be equal to the depreciable base. 5,000 plus 5,000, 10,000, 15,000, 20,000 plus 5,000, 25,000. It means that's equal to 25,000. So students, that's equal to 25,000. 25,000 is the accumulated depreciation. The total depreciation expenses is equal to 25,000. Accumulated depreciation, that is equal to 25,000, which this 25,000 is called the depreciable base as well. The book value which is left, our expectation was that the value of the asset after 5 years will be 2,500. This is what we have it in the in the residual value, students. Our residual value is equal to 2,500. Estimated salvage value or residual value is equal to 2,500. In case if it's not matching, it means our answer is incorrect. If it's not matching, our answer is incorrect. So students, for the depreciation chart, there is a very simple method, a very simple formula. Accumulated depreciation, annually we are going to add the depreciation expenses with it. And for the book value, annually we are going to deduct depreciation expenses from the cost of the asset. Dear students, that's all about the straight line method of depreciation. I hope the concept is clear to all of you. I hope you have understood that how to calculate the depreciation expenses and how to prepare the depreciation chart or depreciation table or depreciation schedule. I hope you have understood the concept of book value and the concept of accumulated depreciation. So that's all about this session. Inshallah, in the next videos, in the next session, we will discuss about another methods of depreciation expenses like units of production method and double declining method or double declining balance. For the latest videos, for the update videos, please do not forget to subscribe my YouTube channel and on the notification bell because you will get notification whenever the new video is uploaded. Thank you so much.